No, I literally saw a chicken cross the road on my way to the desk
We
this
have that
morning.
every day in Tanjong Pagar. That's, I think, part of
Yeah.
Singapore, I guess.
Yeah, welcome to Singapore.
Yeah.
Yeah, welcome to Singapore. I didn't think there'd be chickens just roaming around in Singapore. But regardless,
Flightless birds. I
yeah,
don't know if they're exactly chickens.
shall we get going and get
Yeah, man, let's
started?
go. Eddie, go.
Yeah, obviously this is the first episode of This Week in Carbon, right? And I'll be your host, Eddie Smith. And it's a real pleasure to moderate today's discussion. And the goal ultimately is to bring together industry leaders and dive into the biggest stories in carbon markets and the climate finance industry each week. So I'm super excited that you guys joined today. We have some fantastic guests. So I want to make a quick round of introductions. Or Rene will take it.
All right. So with us, our amazing guest today, we've got Alan Fan. Alan, I met at a conference and immediately just gravitated towards his energy. He puts everybody to shame, including myself, in terms of high energy. I have dubbed him the Terminator of like fintech and climate tech CEOs. This dude is relentless. He will email you 1,000 times until he gets that meeting. You will get the deal. He is the best at it. Like, seriously, the Terminator for carbon markets. Done. Now, we've also got Darina Elzein, who is the princess of carbon markets. She's a carbon market influencer onto her own right. She's chasing me in terms of like followers, and I've got like, I don't know, 100 years older than her. So, puts everybody to shame here. She's one of the coolest and most wonderful people I've met. And that's Serena. And now Eddie, I'll let you introduce yourself for you. No, but seriously, Eddie's amazing. He's a two-time national champ in wrestling, Division I collegiate athlete from Penn State. We're really lucky to have him on the Valaterra team. He's amazing and super high energy, and I'm really excited for him to actually leverage and create this platform for himself to showcase not only his intelligence, but also to basically introduce and showcase other people that have got voices in the market that aren't often heard. All right, Eddie, back to you.
Definitely, yeah. And I think it's super important that we actually are able to put out, some positive content on the carbon market, because most of the stuff that I see tends to be negative almost all the time. So I think, that's
so you're John
also one of the
Krasinski,
goals.
and this is the good news week.
Yeah,
Carbon
I mean,
markets.
well, we'll see.
I was
We'll
trying to
see,
make it the
'cause
all-in podcast,
some of the
but okay.
stories, actually, some of the topics for today might not be the best news, but we'll turn it in and something, see what we got. So let's just dive into
We make
it.
one promise, Eddie. I'll make one promise.
Oh.
We're just going to be honest, and we're going to be forthright, and we're going to call it as we see it, and that's it.
Diving into it, I think, given it's the new year and I wanted to reflect on 2024. So first up, I think it'd be good to talk about the rapidly growing market for carbon removals, right? And reflect on what happened in 2024. So, advanced market commitments for CDR credits, carbon dioxide removals credits for context, were about 3.9 million tons between September 1st and then the end of 2024. So bringing the total to more than 23 million tons of CO2, according to Quantum Commodity Intelligence, right? And in 2024, Google contracted more than $100 million worth of carbon removal credits, both through their independent offtakes and deals facilitated by Frontier. And this was 3 times what Google had expected and pledged to do. So I think that number is quite shocking and also impressive. And their removals lead on LinkedIn had recently said that this is just the beginning for Google, and they're excited to expand support in 2025. So I think that's great for the market. And as a whole, the CDR Buyers Coalition Frontier spent a record of 279 million on CDR credits in 2024 as a whole, through 7 offtake agreements, totaling about 1.4 million tons of carbon. And I think, for context, for the audience, Frontier is an advanced market commitment to buy an initial $1 billion worth of permanent carbon removals between 2022 and 2030. And it was founded by Stripe, Alphabet, Shopify, Meta, McKinsey, and the tens of thousands of businesses that use Stripe Climate, right? So I think with all that being said, the advanced market commitments like Frontier and Symbiosis are accelerating demand and are sitting at the forefront of the voluntary carbon market, right? So with the bigger picture, I think, and setting the scene, like with removals gaining momentum, what does this mean for the broader carbon market, right? And what do deals like Microsoft and Google's, does that signal growing confidence in the CDR space and in the voluntary market as a whole, or is it too early to tell? You know, it'd be great to hear your guys' thoughts and, you know, what your initial thoughts are. Who wants to start us off? Rene, do you want to start us off?
Sure, man. No, it's a really good point. And I think it highlights one really interesting kind of reality. I don't want to call it a paradox because that's kind of infringement on Steve Zwick and Rena's carbon paradoxes piece. But it's a tale of two cities, effectively, right? Just two completely sort of separate stories. Like you've got the primary market, and then you've got the secondary market. And what you just referred to is the primary market, where large buyers are making these advanced market commitments and they're purchasing carbon credits on a forward basis as well as spot for whatever's available. And they're doing that to help to create inertia and to create a flywheel so that they can actually be sufficient supply. So that is super commendable. They're standing strong and resolute with regards to commitment. So we applaud that. But let's also face it, that they're doing that for not just pure altruism, right? Or as venture capitalists effectively seeding a marketplace. They're doing it because they're trying to hedge their liabilities. A lot of the companies that you pointed out to, either as part of Frontier or Symbiosis Coalition, and basically the large cap tech stocks, have had it also a mega trend or mega wave that they've been riding, and that's artificial intelligence. And they've been doing a lot of work for decades, right? And I can point to Microsoft and their previous administrations within their carbon and sort of sustainability teams who've been working on maximizing efficiency and reducing emissions. And for a while there, they started to actually like bend that curve and come down. But the reality is that these companies have been making billions and hundreds of billions of dollars of investment into artificial intelligence because it is a huge mega trend. And commensurate with AI is this voracious, and I stress voracious, appetite for energy, and energy of all sorts, but that has a direct correlation to emissions. And so it's no surprise that their curves have actually not bent down, that they've actually gone in reverse, they've gone the other way. And so they've effectively doubled down, saying, hey, carbon markets represent a really significant tool that we will depend on, and we're not going to choose either or. We're not going to, obviously, they have a fiduciary obligation to their shareholders, stakeholders, and clients, right? They're not going to abandon AI. That is a significant windfall in terms of profits and a future-proofing and growth of their business, right? So that is going to continue, but they're not going to abandon the decarbonization mission because it's an imperative from an entropy and physics component around the world and planet Earth with regards to warming. And so it's no surprise to me that investment's going on in private markets to that effect. And I think it is just the beginning. I think you highlighted numbers, and I always sort of point to CDR.FYI, and they've got a really great analysis and kind of leaderboard on a lot of this stuff. And we're talking billions of dollars. I think it's like $3.5 billion since they started tracking this, invested into CDR across all types. So biochar, DAC and, enhanced rock weathering, et cetera. And you're tracking millions and millions of tons. I think you mentioned 3.5 or whatever million tons last year. I don't know the exact numbers, but I think last time I checked CDRFI, they had like 13 million tons plus of commitments that have been made. And some of those, because they're on forward, haven't yet delivered. Cool, that's going to happen. But that is that. Secondary market is a different story. Secondary markets saw these crazy dizzying highs. And, I had my team and I had a really great vantage point being within an exchange when that was happening. And there was a lot of secondary market trading. There was speculation starting to occur. There was hedging across futures instruments and stuff. And then because of criticisms levied and sometimes quite warranted, and also some other times overblown, that has really taken the wind out of the sails on the secondary market side and really depressed the speculative and the churn effectively in the market. And so secondary market is a different story. Essentially, we're seeing not great stories around some of the trading firms and folks that are in the market, project developers and other folks who have been making layoffs and effectively in tough times. But that's the kind of summary, but I will say we're at a bright spot. You know, we began our business Volaterra after building out infrastructure in the market because we believe that this is the bottom of that innings. We want to build out here, and we believe that carbon markets are an inevitable component of the solution, and that by 2030 these markets roar. And so, like any startup founder, and Alan, I'd love to get your take on this, but you know that you need a runway, and you want to be not too early, but you need to be ready for when that wave comes. So that's kind of my view. Hopefully that makes sense.
Yeah.
Thank you.
Yeah.
And I think maybe just to add, I think it's important to know that it's not just tech giants, you know, just kind of going back to what Rene said, you know, like I think in the media, we always see that tech companies are getting the kind of spotlight in the whole kind of carbon industry, but I think it's very important to note that it's not just tech giants like Meta, Google, and Microsoft driving the demand for carbon removal credits. We're seeing a broad range of industries getting involved, including energy companies, finance firms, and even carbon finance organizations.
Mining industry, shipping.
A lot of them. And I think, you know, even going back to the QCI report, we have seen in that same report where they mentioned Meta, Google, and Microsoft, they've also mentioned, you know, Equinor, for example, Respira, Ørsted, Danish, Norwegian kind of energy companies. And maybe, you know, from kind of secondary market demand, these big oil giants are taking steps in the whole kind of carbon industry. So I think it's also very important to shed light on that and, you know, motivate them even more to even buy more. So
Darina, that is such a good point. And Alan, I don't want to hog all the light, but I want to give it to you right back. But I'm going to throw you an alley-oop here. But basically, Darina, that is such a pressing point. We speak obviously with a lot of the secondary market folks, in particular large trading desks, whether that's commodity traders or the big energy companies, as well as the financiers who are in the space, whether specialized funds, hedge funds, etc. On the energy side, I can tell you that they recognize that this is an imperative, and one that's driven by not sort of external pressures and now sort of the DEI and the kind of CSR kind of veil. They are genuinely committed to this because it's a social license to operate. And so they will continue to decarbonize, and they're trying to aid in the energy transition. They're making investments in other forms of energy, but ultimately their business is energy. And as with the tech giants, because of that energy growth and voracious appetite for energy, their emissions continue to remain either static or increasing. Some are decreasing, sort of, you know, across the board. But they recognize their importance. So I talked to a very large energy player the other day, who we were very fortunate. They brought us in for a leadership team meeting, and they said we're reinforcing our commitment to this market. They're one of the largest purchasers in the voluntary carbon market, and also large trading desks, but they recognize their importance as a corporate, and they will continue to do that. The other final data point is we talked to some folks that are really smart on the advisory side, who are strategic advisors working with C-suites and boards. And they said, look, obviously we can't disclose clients, but we can tell you that what you're seeing is the tip of the iceberg, that there is a lot of latent and pending demand coming. There are companies that are looking at their 2030 commitments and realizing that they are short by 5-10 million tons per annum, and that they are very cautious around what are the claims that they can make and where can they secure credible, high quality supply. And they're just waiting for the starting gun to emerge. And that's, we all think it's ICVCM with the core carbon principles and KO and other sort of stimulus. And then, yeah, that's kind of the extra color. Alan, love to get your thoughts on this, because you see, I guess, that, but also the primary market really front on day to day.
Yeah, absolutely. And when Eddie was like, you know, rallying those figures, it's like really positive to hear. But, you know, when I was hearing those, what was going through my mind was, well, that's great for the removals market. Like, what is happening with the avoidance space, right? And Rene was talking about kind of this separation between the primary and the secondary market. Like the separation that I really want to highlight is the removals versus the avoidance markets, right? Like, have we just accepted that the avoidance market is dead now?
No. Can we point to data? Because I think that you're absolutely right, but it's kind of like people saying, "Oh no, this is out of fashion." It's not the case, man. Like the reality is, you look at the numbers, and again, not to denigrate CDI because it's a super important and a really bright spot in our market. But when you look at total tons, it's 13. Let's just say it's 20 million tons, right? Because there's probably a bunch of stuff that hasn't been announced, right? But on an annual basis, the primarily avoidance-based market is significantly larger, right? It just doesn't get the
absolutely.
press clippings, and it doesn't
Yeah.
get the big ticket like, whoa, they spent $100 million or $1 billion, or
And
whatever it might
also
be.
doesn't get all of the cool buyers buying credits, right?
Yeah,
Like
yeah.
your
Yeah,
Google,
yeah.
Microsoft,
Yeah, the
you know,
cool kids club.
yeah. And everybody wants to be associated with those kind of
Marquee buys.
front line, front like
Mm.
headline stories. And
Mm.
yeah, so but I guess coming back to the reason why the Strike Coalition was created is to see the market, as Rene pointed out, right? Like, is to incubate these different like kind of new technologies that's going to like down the line have like gigaton potential to remove carbon from the atmosphere and save us all. But the idea for these technology companies to put them early money in is to drive down the cost per credit down the line, so it can become affordable for like the broader market to buy credits. But when I look at the broader market, right, like there's like very limited activities with affordable credits at the moment. So like what is going to happen, right? Like, I'm keen to get your guys' thoughts on this. Like, what is going to happen when eventually those costs do come down, right? Like, are we sending the projects to just like a no man's land?
No. I don't want to hog it again, but I'm going to jump in here because again, I'm unafraid to wade in. Look, I think rationality and just logic and pragmatism prevail, right? So having decade plus, maybe even longer, just kind of showing my age, how old I am, worked with corporate buyers, I know the reality of budgets. Budgets are a constraint. It's a rate limiting step in the process. Not every company has relatively low emissions profile subject to an enormous balance sheet. The mega cap tech companies do, right? Look at their valuations in the trillions of dollars and their profitability in the hundreds or tens of billions of dollars and a relatively small footprint relative. You look at another industry like aviation, where really high scope 1 emissions, and it's like 98% of their like emissions coming from fuel burn, which is a critical component to literally getting planes off the ground. They can't disrupt the physics of takeoff and kind of liftoff. So they have a very different balance sheet reality. They would love to buy really exotic, I won't say high quality. See, I'm being very deliberate with my words, but very exotic enhanced rock weathering or direct air capture or biochar that's in really 2 orders of magnitude, or at least 1 order of magnitude more expensive than where the avoidance camps lie. And so historically, what they've done is what every rational investor does: create a diverse portfolio and dollar cost average by buying a bulk of that portfolio, whatever that percentage is, 80, 70%, from low cost, high quality, right? It's good. And then they go up to better and then best. And so it's an 80, 15, 5 split, right? Like that kind of structure. And it could be 70, 20, 10 split. But that dollar cost averaging allows them to showcase those marquee projects, but bring down the average price and then make it viable. And I think that's just the reality, but no one talks about it because it's sensational to talk about, oh, massive, $100 million transactions. That's not the norm. I think that's, like you said, effectively seeding the market for the future. And again, trying to bring down costs by increasing scale, just economics kind of 101 on that side. And so, yeah, finally, the bit is, like, I think Oxford Principles just nailed it, right? In terms of their transition hierarchy. Like, we just go from tech-based avoidance, like renewables, to nature-based avoidance, to then nature-based removals, and then tech-based removals, and kind of more longer, like duration type of assets. But we have to go up that curve. And like all technology adoption curves, there are peaks and valleys within them. And we're just in one,
Yeah, the Oxford Principles, I would say, has been a key driver in demand for removals, at least from a UK and EU perspective, right? But with what you guys said, is it fair to say that we're seeing maybe a little bit too much emphasis on carbon removals versus avoidance? Should these buyers be also prioritizing avoidance credits just as much, right? Is it fair to
Listen,
say? Any thoughts?
In technology, it always goes through these kind of peak hype cycles. At the beginning, you like this technology trigger, a huge hype, inflation, and then kind of the trough of disillusionment, and then you go up the slope of enlightenment, and then the plateau of productivity. That's the hype cycle, right? And we saw it with blockchain, right? Remember a few years back before the pandemic, like it was just blockchain everything, right? And it was like, oh my God, blockchain is going to be amazing. It's going to revolutionize the world. And then kind of reality set in like, yeah, this is a really important technology for providing immutable records and all sorts of stuff, but it's going to take time to distribute itself, pun intended in terms of distributed ledger, puns and dad jokes, but distribute itself through financial systems that is trying to disrupt. And then we've gone through this trough of disillusionment, and it's still kind of volatile therein until eventually it gets adopted. Internet was the same, mobile telephony was the same. It's just that in the old days, like those tech cycles were really like, it took a long time. And now like things happen in a much more compressed moment, but it's no different for CDR. Huge promise. DAC was the talk of the town in 2021, 22, whatever it was, 23. And you look at 24 numbers, they've come off a fair bit. Why? Because of the difficulty of scaling that technology and the cost of implementing it. And also the concentration of the buy side interest. Like I'm not going to give it away. People look it up. Like who's buying 98% of all DAC credits in the market? Like give you a clue. It starts with an M.
I don't think we're like focusing on removals too much. I think removals is great. Like we should focus on removals. We should focus on avoidance. We should focus on the entire market, right? But
we should do both, bro.
Yeah. But I do think what we're focusing on is like we're getting like too polarized on the two ends, right? Like the people that don't believe in the carbon markets are only focusing on the worst stories. The people that are advocating for carbon markets are only focusing on the best stories, and no one's like seeing like the other side. Because at the end of the day,
can I disagree with that? Because you guys, our industry are examples of people that just get on with it, and we are doing the work that's necessary. The collective we, right? Because it takes those people that have the gumption to put money at risk, to go and do the things and to build that the future, right? So that those people do it, but they just don't get the press clippings. And quite frankly, the media has a lot of loss of its lackluster and has lost a lot of its trust. It's been eroded. The presidential cycle in the United States is a perfect example. How the Republican ticket did leverage the kind of revolution of new media, podcasts in particular, and not traditional media. Why? Because of the bias that was exposed. And whether you agree with the politics or not, there's a paradigm shift that's occurred. And so I think, worrying about the traditional media and the legacy and the attacks, cool. Face them head on, but be unafraid of these attacks, build better, and don't let the perfect be the enemy of the good, right? And then just get on with it. And you guys are all doing that every single day, and unapologetic.
Yeah, but like getting back to like the point that I was trying to make is, I'm feeling a real like paradigm shift or cultural shift to like in the mass market towards carbon credits or towards the carbon industry overall, right? Because
in what way?
I mean, it's just not cool to like say your product is carbon neutral anymore, really, right? Like a few years before, like 3 or 4 years, maybe 4 or 5 years ago. That was the really cool thing to be associated with. Like people wanted to see that from small businesses, right? And fundamentally for this market to take off, and also for this market to serve the purpose that was intended, which is to actually combat climate change on a massive scale. Like we don't like. Well, like the Googles and the Microsoft, that's great. But we really need like mass market adoption, like which is the hundreds of thousands of like small, medium like businesses to look at this market as a credible way of performing climate action.
Yeah, well said. Well said. And I think we could kind of dive into this and for the next few hours, but I want to be careful with time. Oh, do you have anything you want to add, Darina?
I was just kind of like wondering, why is it not cool to be carbon neutral? Because from my experience and what I can see, I think it is still cool for people to have their cargoes kind of like neutral, and people want to be associated with this. So
Can I
Yeah.
give you guys the perspective of an old guy that's been in and has seen a couple of these like waves of fashion? In commodity, we call it, cycles, right? Boom and bust. But it's literally fashion. And whether it's cool or not is kind of irrelevant, but it is the Achilles heel of the VCM, which is it's driven in large part by demand that is not sufficiently sticky, right? It is not compliance driven. It is not mandated by law. It is driven by doing good and driven in large part by PR. And what happened, and this is just symptomatic of the reality of running a global business, is that when you get positive feedback, it is accretive to your brand. It is accretive to your business bottom line and to your clients. And then when there's criticisms in the media, risk aversion takes over, right? Risk teams, management teams go, whoa, 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 whoa. We don't want our name in Bloomberg associated with bad actors, and we don't want to be with this. Like, show me the upside. And nobody ever got fired for just being cautious in a corporate. And so that's what's happening, right? But like everything, pendulums swing one way and then the other. And we're seeing this in a broader kind of global context and exemplify with a magnifying glass in the United States. We went really hard left, and the pendulum is now swinging back to the center and course correct. And so DEI is now under attack, and everyone's afraid to come out and kind of stand up, with the exception of some of these really committed folks that are unafraid, unapologetic. That cycle will kind of find its way. And what I hope is that we don't get oscillation from one way, like whipsawing to the other, because that's not helpful, and you can't make long-term capital investments based on that. What you need is a drive back to the center. And I think that most people are exhausted, excuse the language, about the polarization with everything, right? It's red or blue, right? It's liberal or conservative, or it's anti-markets or environmentalist. No, like what we are doing as an industry and providing a solution is economics 101. We're pricing an externality, and we're providing a tool set that people can choose to use or not use. And guess what? It is capitalistic. We live in a capitalistic world. You only create business for the purpose of providing shareholder return. But in this case, you're also doing good for the planet. And it feels good to run a business that does good for its shareholders, but at the same time, the primary mission is based on the planet and the communities that benefit from those investments, as opposed to extractive type of industries that aren't necessarily constructive in a lot of ways, right? Or other damaging type of industries. We are and we need to be unapologetic about being capitalists. They're celebrated in the same media rags. Can I tell you? Bloomberg, I'm going to shout them out. And I like, I like the reporters. Hey, Natasha, how you doing? And, but in the same rag, literally, they will denigrate someone for taking voluntary action on climate change and being carbon neutral, and then they'll champion a guy that was an ex-Citibank or a commodity trader at JP Morgan, setting up his own firm to trade coal, right? Like, what a champion. This guy's making hundreds of millions, and then this company is actually stepping up to the plate and doing something voluntarily, right? And then the hypocrisy in that is astonishing. Like, why the hell are we denigrating people for trying to be better? And that to me just is I'm just going to call out the illogical nature of that and say, fuck you, stop doing that.
Yeah. I know, well said, Rene, and I completely agree. And on the topic of voluntary commitments and capitalism, I think it's a good segue into our next topic, which has been making headlines this week, which is about Jeff Bezos. As we know, his $10 billion Earth Fund has cut ties with the Science Based Targets Initiative, and the Financial Times headline wrote, and I quote, "Decision to stop backing SBTI comes as Amazon founder seeks to curry favor with Donald Trump." That was a Financial Times headline, right? And I think for context, for the audience, the Bezos Fund was set up 5 years ago to help scientists and activists and NGOs find climate solutions and solve nature issues. And it has become one of the largest funders of the SBTI. And the Science-Based Targets Initiative is a globally renowned body that holds sway over how corporates such as Apple and H&M can achieve, credible net zero labels. And for context, more than 6,000 companies around the world have been working with the Science-Based Targets Initiative to achieve their climate commitments. We've seen that kind of evolve over the last few years. I'm excited to get your guys' thoughts on this, but with withdrawing of funding comes as the fund president, Andrew Steer, said he was stepping down as the head of the body after nearly 4 years. And he said on a podcast last week that the fund had paid out 2.5 billion so far, in part to help professionalize climate bodies. And in quote, he says, there's still a pretty strong legacy in some mainstream environmental organizations against capitalism, quite frankly, including opposition to carbon markets as a climate solution, he said. So I think that was a great segue into this topic. And I think it raises the questions about influence of, major donors on voluntary carbon standards, what this means for climate finance and carbon markets moving forward, and also raise questions about the SBTI as a whole. As we know, there's been some controversies on that. So I'm interested to hear your guys' thoughts. And
who's brave enough to wade into the water?
Rene, I know you're itching over there.
No, I'm not. I'm gonna step back. I've not only cannibalized a lot of the time here, but I really want to hear what Alan and Darina have to say.
Yeah. Feel free, whoever wants to go first.
I think this kind of sends a concerning signal to the broader carbon finance and corporate sustainability landscape. I think the SBTI has become a cornerstone for companies setting clear science-backed emission reduction targets. So I think, maybe this had something to do with the Trump administration, given how close, Jeff Bezos is with Trump and how much support they've kind of, given him. So I think, it could potentially kind of create uncertainty about how companies assess and report their emission reductions, which could potentially weaken the effectiveness of carbon markets. So definitely not a great step from Jeff Bezos, given, how much influence and money they can actually pour in the carbon markets. But I think, I think it's very crucial for businesses to continue to embrace initiatives like the SBTI to ensure that carbon finance remains reliable, especially in 2025 when it's such a big topic for this year.
Yeah,
Alan,
well said.
Yeah. What I found most interesting about that was when Eddie talked about how the FT talked about Jeff Bezos pulled out of SBTI to cozy up to Donald Trump, and really that is the elephant in the room that we're not talking about, right? Is kind of like this shift of culture again. It's the culture shift of going back to on doing the good work of climate change, DEI, et cetera. And I'm actually reading Elon Musk's biography at the moment.
Oh, that's a great book.
Yeah, it's a great book. And what I found most interesting about that book is how it talks about Elon Musk's relationship with Donald Trump in the early days, right? Looking at Elon, how close Elon is with Donald Trump now, I was really surprised to see how Elon was very skeptical of Donald Trump in the early days, and how Elon Musk pulled out of this group of advisors when Donald Trump pulled the U.S. out of the Paris climate agreement, right? And we go from that to now Elon being, in the place that he is, and now Bezos funding from SBTI. So that for me is the big worry here.
Yeah, very well said.
Maybe
I would.
What happens to kind of the Tesla share with, the.
It's going great. As Tesla shareholder, it's doing great.
No, it's not.
Come on.
Yeah.
Seriously, I think I'm up 80% since
not
I
in
bought
the
in.
past week.
Doesn't matter. I think it's average. Again, play the long game.
I'm
gonna say his net worth is increased significantly. But can I give my opinion on this topic? Because I think there's a conflation here, right? We're taking one data point and then deriving a conclusion by saying, oh no, the Bezos Foundation has pulled the funding. Hey, you know what? That is their choice to do what they're going to do, and they have to justify that decision to themselves. And ultimately, it is their money. Now, we don't know enough about it, but I have an immense respect for the people on that staff. Jeff Bezos and Lauren Sanchez and their team at the Bezos Foundation built an incredible foundation. They've got really incredible leadership, and I happen to know a number of those people and hold them in incredibly high esteem. Kelly Kissinger in particular. Hi, Kelly. So I think that they're great, and we don't know is the reality,
Yeah.
right? So I don't know. And then it's suspected that there's a political leaning here, and maybe this is an example of the pendulum that went too far left, coming kind of back centrist. Okay, we don't know. But what I would like to opine on SBTI, and I've said this both in public and in private fora, that SBTI, you know, this whole furor, what happened, 9 months ago, I think it was in April, I think we were on the way to Florence at the time for the European Climate Summit when this thing came out, where basically there was this exodus or threatened exodus about this mutiny effectively at SBTI, right? That leadership had gone out and said, basically, we're supporting environmental attribute certificates, and there's a place for them in substantiating net zero claims. And it was that net zero piece that really kind of broke the mold there. And then the rank and file staff revolted around essentially what the board and the leadership and their donors had discussed. And then effectively they backtracked and they've created a vacuum. And so back to the inaction question, Alan, what you said earlier around there's millions and millions of companies, whether they're SMEs or large companies, that are just sitting on the sidelines waiting for a tacit endorsement to go. Like, it is safe, you can go in. And they're so risk averse that they're not doing it. And SBTI has essentially got a tool set that they're neglecting to offer out to enable that. And ideology should have no place in this, right? It's a choice, but they should set out a framework via which is best practice. And then ICVCM defines, and the VCMI defines the claims and the quality of the carbon credits therein, and now go, right? It's no different to any other asset class. We just need to provide the solutions, and then guess what, guys? It'll be cool again, right? But SBTI pushed it too far, quite frankly, and they're alienated now, I think, their donors, because they're not being constructive, and they're making it possible for certain of their customers, effectively, the companies that are trying to adhere to their group. And to me, the most telling thing was when very large corporates, very large and well-recognized names exited SBTI. Unrealistic and impossible expectations around that. Effectively, because our emissions increase, because our investments in AI, bam, you're stricken off the record. And we're only seeing that in retrospect, right? You declare, you then start reporting, and then it's a 5-year kind of piece, and then they say, give you a scorecard, you're good or you're not good, naughty boy, naughty girl. It's silly, right? Decarbonization is hard. Let's not think that it's an in vitro process that you can do in a lab. You've got a multi-stakeholder process, and there's a reason. And I say this with absolute respect and love for scientists. For full disclosure, I'm a biochemist by training, microbiology, almost did a PhD. But there's a reason why scientists aren't like running most companies, right? They may be on boards and certainly on advisory committees, and we should listen to what they have to say. But businesses are run by business people, by lawyers, by investors, and by people that are able to basically build things. And it's the same thing in the real world. We've got engineers and architects and scientists and politicians, and real people do real things. And you can criticize from over there in your perfect ivory tower, right? But unless you've actually done it and gotten your hands dirty in the real world and operating a business with budgetary constraints, people that depend on you for employment, the families that depend on them, the stakeholders, the customers, the regulators, et cetera, it's really goddamn hard. But we should support people in their objectives, right? And companies are no different. We should support them by saying, hey, here's a solution, here's your pathway, let's support you. You make a couple of mistakes, it's fine. Let's learn from those mistakes and try not to repeat them, because that's how the real world works, and that's what being an adult is, right? And then living in this puritanical world doesn't work. Right. So anyway, I went off on a bit of a tangent, but SBTI, reality check.
The analogy for me is I play a lot of video games, and there are two types of video games that I give up very quickly. The ones that are too easy and the ones that are too hard, right? A good game is designed somewhere in the middle, where it gets like harder and harder incrementally, where it's like achievable in the beginning. Honestly, it feels like now it's just too difficult. So businesses are just like, well, there's no way that I'm going to do this anyway. So why are we even talking about this?
Yeah, and they don't. And the fact is that they in most countries, in most places, they don't have to. It is voluntary. It's particularly in the United States. There's no real penalties for a lot of the companies if they were to just walk away from their climate commitments and climate targets. There really is no. It's all voluntary, as Rene pointed out. So for these NGOs to be kind of attacking these, voluntary buyers that are supporting the climate action, right? I think that's just quite ridiculous, to be honest. I mean, if we look at history, actually in the 1950s and 1960s, after World War II, right, nuclear energy became a big thing, right? But the NGOs, such as Greenpeace, had confused nuclear energy with nuclear war, right? So the biggest, I think, anti-nuclear energy people in the 1960s and 70s were the NGOs, such as Greenpeace. They're saying, no nuclear. We want oil and coal. They're saying no nuclear. That's what they said, less than 100 years ago. And I think that's kind of similar to what we see today in the sense of, oh, no carbon credits, no offsets. You need to decarbonize immediately, when in reality, these people really don't understand how heavily reliant these systems are on fossil fuels and how complex these systems are. Like for aviation, for example, how can these NGOs expect aviation to just decarbonize within 5 years or 10 years? It makes no sense. It's going to take decades and decades and decades for it to become viable, especially as the main aspect for their companies is growth, right? So how do you balance that? I just think it's fascinating when you reflect on history, it comes up time and time again. Some of the biggest anti-nuclear energy, which is the cleanest, most reliable fuel that we have, or energy source that we have, and that people are doubling down on today, was kind of put down, similar to carbon credits, less than 100 years ago. So I think history kind of repeats itself, and I think the NGOs need to, learn a bit more about how the real world actually works. No offense to Greenpeace, but yeah. And I think this is a good segue into our next topic, being careful of time here. And I think the US funding on that topic with Jeff Bezos and the SBTI, another funding withdrawal, or not withdrawal, I would say, but US funding for the LEAF coalition has been suspended as part of the broader 90 days suspension of all foreign development assistance announced by the White House, right? That's what Emergent had said, who is LEAF's administrative coordinator. And for context, the LEAF coalition was set up in 2021 as a public-private initiative to buy large volumes of carbon credits from jurisdictions around the world to support, efforts to tackle deforestation in the fight against climate change, right? And the U.S., together with other nations, including Norway and South Korea and the UK, are donors to LEAF. So they provide funding for forward contracts to finance results-based payments to help reduce deforestation, right? So, and Emergent did not comment on how these agreements might be affected by the U.S. decision. And I think this kind of plays into the broader macroeconomic situation with, the new administration coming in. Is obviously the biggest topic on everyone's minds across asset classes, right? It plays into the bigger picture, but specifically for climate, on how the U.S. has withdrawn from the Paris Agreement, a move that, many of us saw coming. And, the most recent accounts for the UNFCCC shows that the U.S. committed 7.2 million euros of funding for 2024. And for the climate arm's core budget, that's almost a fifth of the organization's total funding of 34 million euros. So under Trump, this obviously is going to be off the table, but some optimist hopes that the private sector in the US will continue to engage with international climate finance, given the fast growth in energy investments and many developing countries in carbon removal, which the DOE has been actively involved with domestically. So I guess segueing to that, where do we see US, what does this mean for US funding in regards to, let's say, large-scale REDD+ projects? And in regards to the private sector, can corporations step up to fill the funding gap? Or is government support really essential? Is that the key, right? And I think there's a lot of angles to come at this from. But if US climate priorities shift, which they obviously are and will be under this administration, could we see a reversal from corporates? I think that's on everyone's mind. And I think that's a really good topic to bring. I'm interested to hear your guys' thoughts.
Yeah, I can start with that one. I mean, the one that I think you also left out is the USAID, right? I work a lot in cook stoves and community-based projects, and I know project developers around the world actually have been relying on USAID funding to set up their projects as well. Right, and now that it's discontinued, like there's really going to be a lot of concern about where the project financing is going to come from, especially with the projects that have already committed finance from USAID. So yeah, and I think you're right. Like the broader concern here is like back to the theme is really that culture shift because we've got elections coming up in Australia, right? And is this going to happen in Australia as well with a shift towards more of a kind of the right-wing government? And when you look at the government position of the US, it's really a global leader, right? Like over the last, I don't know, 100 years, the US really has been kind of setting the bar in a lot of the world around different important topics. And now it feels like they are leading the way to like undoing a lot of the structure that has been created in the international society. So it's really interesting to see how this one is going to unfold, not just for the carbon market, but for a lot more other things as well that are like super important.
Yeah, completely agree. Rene, do you have any thoughts on this?
Yeah. I'm not going to denigrate the pain and the uncertainty and the instability and the concern and all these emotions that people are going through right now across the world, and kind of whipsaw effect that a lot of people have, like whiplash, I should say, as a result of the change of the direction of the prevailing winds in terms of geopolitics. But what I will say, and again, this is me as a glass half full kind of guy and optimist, and every culture has this, but the Chinese culture has it as well, in terms of famous proverb that effectively in every crisis that there's an opportunity. And so I'd like to just kind of provide some of my perspective, and again, maybe it's kind of hopefully manifestation at work, but from a UNFCCC perspective, and the vacuum that the US leadership and now absence has created is an opportunity for other nations to step up and to fill that void. One, there's a funding component, and then there's an opportunity to demonstrate leadership. When others pull back, there's opportunities for folks to take on those challenges and face them and embrace those opportunities and demonstrate leadership. And the other folks or the other quotient or kind of group that needs to step up is the private sector. And we actually already have a dress rehearsal for this, because, sorry to point out the obvious, but this is not Donald Trump's first administration. In his first term in 2016, this level of, oh no, we've lost so much momentum and this is what's happening. And then his first, withdrawal from the Paris Agreement had a counter effect, which was increased participation from the private sector that realized policy is not going to be the tailwinds that we need. We need to fill that void, and companies have stepped up. And quite frankly, and again, I'm cherry picking here with data, and I know we've kind of talked about this, so I don't want to beat the dead horse, but the fact that these mega tech companies have come out with announcements over the last few days, certainly since Jan 20, about these big commitments and reinforcing their commitment, long-term energy companies doing the same around decarbonization and carbon markets, I think is a bright light, and we should look at that. Right now, again, it's not great news story, but again, let's just look at the optimism here. There's an opportunity here for leadership. So I'm going to watch that story. I'm not going to give in to fear and to apathy, because it doesn't bring anything except for misery. And honestly, we have an obligation to our future generations. And again, now I'm talking like a dad, but to make the world a better place than when you came in. And I as a technologist and kind of optimist, there's so much cool stuff that's happening, right? And when we look back at what life was like even 30, 100 years ago, right? We've seen so much benefit to the world in terms of increase life expectancy, less child mortality, development broadly, and we've seen technology aid in that, and we're already in the first innings, but we're about to go on the greatest kind of technological revolution, which is driven by AI, and I think that's going to be really interesting to watch. So I don't know if that answers the question, man, but
yeah, definitely. Darina, do you have any
just
thoughts?
something to add. While I do strongly agree with what Alan and Rene said, I think it's really important to kind of highlight how crucial consistency in climate policy actually is for long-term kind of progress. I think we need to incentivize companies to fill in that gap and actually not be scared of these changes. The private sector has to play a major role in bridging this gap and ensuring that climate action continues, even in the face of this kind of policy uncertainty, because that's exactly what we need long term and for future generations, just as Rene mentioned.
Yeah.
Gotta just
No,
don't
yeah,
believe in
absolutely.
democracies anymore, man. Like, what is this shit? We're in, we're out, we're in, we're out.
Yeah,
it's child's play, honestly.
For institutional investors, it's not great because, like, Darina, I want to double click on that comment around private sector, but let's just talk about it from an investment lens. And Eddie, I know you've got a really insightful view on this because you've been privy to some really interesting conversations. I want to get your take on this as well, not just moderating. But investors need long-term time horizons because they have fiduciary obligation to their stake. Well, they're investors, right? They're LPs in most cases, and they need a visibility on discount, like forward cash flows, and they need to have an ROI picture to determine from a risk lens and investment committees, will they make those investments? And if policy whipsaws one way or another, it's too unstable, and they're like, it would be cool, but we're not going to do it. We're going to find something else that is more stable. It has recurring revenues. So Eddie, within that context, you and I had a chat last night, or actually yesterday lunch with somebody, and you mentioned this, and I found it to be really fascinating around the way that financial folks, let's say asset managers, are looking at this lens. And then maybe you want to bring it back to, like, again, primary market transactions, not on the removal side, on avoidance, that are happening that nobody sees.
Yeah, happy to provide some insight here. But I think, so at the institutional level, when you look at the bulge bracket banks or, large private equity firms, these are very sophisticated investors that look at, what's that? I'm so confused. No, it's all good. We'll cut it out. But
I'm eating in the background, and I'm muting my microphone, so no worries.
It's okay. When you look at institutional investors, right? They look at the industry and they ask, first of all, there needs to be intrinsic value, as in any asset class. You need to be able to project future cash flows, out 10, 20, 30 years in the future, and then discount that back to the present value. And with carbon credits, a lot of the times it's for carbon projects specifically, where 99% of the revenue stream is solely dependent on the sale of the credits. It's too risky for investors, right? So what institutions do, such as Goldman Sachs and JP Morgan, they have these funds that invest in nature-based, and this is why I think the nature-based solutions market has been around for a long time with ecosystem services, but it's also becoming almost like a much wider trend in the industry amongst participants, because these institutions invest in the underlying business, right? Let's say you have a biochar company in the Midwest US, or you have agroforestry commodity company in Australia. These are intrinsic value businesses that give the investors, 5 to 6% return on their cash, which they can do the analysis for, and then the sale of the carbon credits falls on top of that. So they take that type of approach where there needs to be a real. I don't want to discredit the carbon market or carbon credits, but obviously not doing that, but there needs to be that intrinsic value that investors can make a return on their investment, right? And I think it's really interesting to see, we see this in agroforestry projects, particularly like with the Restore Fund. So Apple and Goldman Sachs have a partnership, and they invest in afforestation, reforestation, revegetation projects. And a lot of the times, no one in the market even knows about these projects. No one even hears about them because it just all gets scooped up in the primary market, right? And it's no one knows this is even happening. It's not in any of the headlines, right? It's just all behind kind of closed doors. And yeah, I find that interesting. And from an investment perspective, the question is like, what happens after the term of most carbon projects, right? And the answer is usually nothing. For most carbon projects, after the last carbon credit is issued, what happens? Is there an ongoing transition or business that continues to have a sustainable transition after that project? Most of the time it's no, because a lot of the project developers just try to, sequester carbon and monetize that wherever they can. Whereas the institutional approach is like, where are these companies that are involved in this space? Where can they monetize their liabilities, which are their carbon emissions, right? And that's where the carbon credits come into play as an asset class, right? Because you can't just buy one carbon credit. Like no one's going to sell you one carbon credit. That's not a thing. And if
Oh, we'll sell you one carbon credit. We can. I'll take it.
I was going to say, don't give away the game, Eddie.
But look,
No,
I
totally.
think what you explained, like, it makes a lot of sense for the investors. But at the same time, that mindset makes it super difficult for project developers, right?
Yeah.
Being on the other side. Because if investors view carbon as, the cherry on top, you should have a business that we are going to invest in anyways. And then, you have this carbon that is going to be really cool and sexy for the next 10, 20 years. Count us in. That creates a huge amount of uncertainty for project developers. And it goes against what is needed for project developers to actually commit and develop high quality carbon projects, right? Because project developers are not going to like make this their main business and give it the attention and investment is needed unless they view carbon as the main product of their business, right?
Mm-hmm.
We see this.
Say that again, Alan. I want to kind of dive in. Say it again.
Well, carbon project developers, like they're not going to develop high quality projects unless they view themselves, unless they view their organization, unless they view their core product actually as the carbon credits, right? So we see this a lot with the project developers we work with in, let's say, the cook stove space, right? And to go back to what Eddie was saying, a lot of these organizations started out as clean cooking companies, and then carbon got hot, and then they started doing carbon. And now, like, we just see a lot of project developers confused about what they are. Like, are they a clean cooking company or are they a carbon project developer? Like, if they're a clean cooking company, they should be using Salesforce to track all of their data. But if there are a carbon project developer, there's no fucking way you should be tracking all of your carbon data in Salesforce because that's not what it's built to do, right? And the same analogy, I imagine, can be drawn across all other different types of carbon projects as well. And this is not going to change unless investors actually see carbon as an investable asset class to give project developers.
I think that's the real thing that I wanted to highlight. So thank you for saying that. It's the investability. Right now, because of depressed carbon market prices, projects that are geared towards, let's say, 99%, 100% of their revenue coming from the sale of carbon credits are not investable until you have an offtake agreement, right, that de-risks the transaction, and then financiers are willing to step in and provide debt financing, which is cheaper than the equity equivalent, right? It's basically a risk adjustment lens that the fiduciaries, right, look through. And so that investability question is the case. When carbon market prices were significantly higher at the peak in late 21, early 22, before this kind of shift and kind of unwinding of the spool of liquidity in the broader capital markets, And then uncertainty piled on top of that, and criticisms around overcrediting and undermining of the integrity piece that has occurred over the last 2 years. Carbon was investable. We saw a number of financial intermediaries step in and try to bridge that gap, and even go more aggressive and speculative to try to build out the next wave of supply to secure it, because they saw really material demand. So until we see demand coming back in or substantiated through offtake, project developers are struggling to get finance. And so what Eddie was saying before, and I think is really relevant, because we spoke to a number of financial players, really large end of town, right? We had a number of meetings in Wall Street with a number of these big financial institutions. And it's shown in the data. There are really large pools of sums. We're talking billions of dollars, billions with a B, attributed to carbon projects today on the primary side, but those institutional investors require a baseline. Those projects need to have other sources of revenue through agroforestry, through timber, through other forms. I'm pointing at nature-based as the kind of example that represents the largest quotient here. And then on top of that is carbon revenue, and that's the kind of the cream on top. Where carbon markets kind of struggle, and I think David Antonio, I just want to shout out him and Transition Finance, his new vehicle. He had a chapter, and I can't remember what it was. I think it's chapter 6 or something in his like long report. And I encourage people to read it. But it talks about rethinking additionality, right? And we have again, and it's our roots as an industry from the NGO community, right? The folks that we've denigrated here for kind of being anti-capitalist and overly woke, but some of those things are just kind of baked into the cake, and additionality is one of those things. It's a spectrum, right? And so these projects that have alternative revenue streams are questionable about additionality. No, not really. There's tipping points, right? The project wouldn't go ahead or wouldn't be financeable without the carbon revenue. That's the real test for additionality. And then to Eddie's final point is like, what about at the end of the crediting period? Right? What happens then when no carbon credits are then being issued to that project? Does it still stand? Do the community still benefit? You know, what is the return to those investors, those communities, those stakeholders? And so we need to rethink this approach. And I challenge like that kind of notion. And I think you're absolutely right around investability. 100% agree on that. But this notion of, well, they're finding it difficult. They're finding it difficult because they're not adapting. One, they're not evolving this concept of additionality and understanding that they need to de-risk their stack. And the reason why is because project developers, they come from a different world, literally and figuratively. They don't speak the financial language. And so investors come in and project developers come in and they go, cool, this is nice. I really want to do it, but let me help you, basically. Help me help you. And they're not doing it. And it's just like the old adage of like, you know, men are from Mars. Just speaking different communication styles.
That is a great point for us to plug in our new service, right?
Go for it, man. Shout it out. No, totally.
Feel free to edit this
free.
out if it's just against protocols. So yeah, we've very recently started offering advisory services to project developers to help them, you know, do financial modeling, put together pitch decks, put together business plans to help bridge that gap. So if you are a project developer, you're looking to raise finance, come speak to us.
Great. And I'll do a plug as well. And then Darina, your turn to do a plug. No, seriously, we're doing that right now. We've been kind of head down for some time, but we've got some big announcements at Volaterra, and we've also got some announcements on other things that we're working on around kind of innovation and democratization of the market. But on the commercialization of a pipeline that we're working on and we'll announce in due course, we've been working steadily with project developers on the nature-based removal side and chose these partners because they were sophisticated with regards to the financial modeling. And because we can actually now get this package to the investors to help them to raise capital in the debt markets. And later on, we'll be doing a Series B where we're an advisor on that. And they can access capital markets there, venture and other forms in terms of equity investments. But everything is predicated on the offtake. And that's where we, on the Volaterra side, are focused on that corporate sales and commercialization piece, because that's where we add value. And guys and girls, like the reality is the whole world works on this value proposition. If you add value, then your business is viable, right? I've worked on that principle for my entirety of my career, and I've had mentors that just told me, provide $100 worth of value and charge $20. And surprise, surprise, the customers keep coming back. If you treat them with respect, they keep coming back because it's a good value proposition. And you shouldn't be afraid to say, please pay me for my service if I'm adding value. If you're not adding value, stop taking the piss. Go do something else. Simple.
Yeah. No, yeah.
So you're adding value.
Agree.
Congrats on that product set, Alan. That's awesome.
Yeah, that's
Darina,
great.
do you want to
I
plug
think-
anything?
Maybe I can say that my main line of work would be actually to help, buyers and sellers navigate the voluntary carbon credit. In a sense, I work both with, primary market and secondary market, focusing on, ensuring the liquidity, the transparency, and the access to high quality credits. So I work with corporates, traders, financial institutions, looking to integrate carbon solution credits and projects into their sustainability strategies. So yeah, feel free
Awesome.
to talk to me.
Reach
as
out
well.
to both of these amazing folks.
Yeah,
Eddie, back to you. What
yeah,
are we on
and
to next?
Yeah, so careful, conscious about everyone's time, obviously. So I think for the last kind of topic of the day, just a bit of a number crunch from Allied Offsets, our trustworthy, reliable source. I personally
Shout
love
out to Allied Offsets.
Allied Offsets
Really good
platform.
dashboard.
I think it's great. So just to crunch some numbers from the start of 2025 till today. So this is fresh data. We've seen about 951 buyers with over 12 million matched retirements at an estimated notional value of $98 million. And so the year is off to a pretty strong start in the voluntary carbon markets. And from a sector perspective, energy companies have been dominating retirements, accounting for over 70% of the total so far, followed by professional services and aviation and industrials, as well as technology. And I think this reflects, the adoption of carbon offsets across a diverse range of industries, right? And the type of in terms of project types, forestry and land use projects lead the way, followed by renewable energy and chemical processes and industrial manufacturing. So I think that distribution, specifically with forestry and land use, kind of leading the way, as I said, kind of highlights the increasing demand for for nature-based solutions such as afforestation, reforestation, and revegetation projects, as well as blue carbon, on top of industrial decarbonization initiatives. So quite a promising start to 2025. And will these trends continue is the question. And is the tide turning? We shall see. I'm interested to hear your thoughts.
Good one. I like that one, Eddie. Yeah, man, look, they'll continue. The reality is, I think carbon markets are inevitable. There's an end game here, and you can keep playing and fluffing around, but there's an end game. They're inevitable. Decarbonization is hard, and doing it solo without price inputs just makes investability difficult. We just talked about investability on the project side, but if you're a company and you're trying to go up that marginal abatement cost curve, if you do not have a requisite price signal with regards to carbon as an external externality, you do not go up that value chain. You go at the curve, the map curve, and then you don't go into your value chain, I should say, right, to implement those reductions because they cost too much. And so we need to let people know, companies, decision makers, and leaders, that the carbon market is open for business, that it is a valuable tool. Like any asset class, discern and be smart around how you purchase, choose credible counterparties, do due diligence like you do for everything else, right? And then engage. And then substantiate commitments, and then continue to iterate and improve over time. And it is okay if you slip, you make acquisitions and your emissions grow or your business grows, as long as you're trying and to do that, and then you compensate for emissions today and invest in removals over the long term. Then if everybody does that, we've got a pathway to decarbonization. So there's a lot of complexity in that and nuance, but yeah, it's going to continue.
A lot of complexity and nuance, but at the same time, it's also very simple. Right?
Yeah, man, just do the work.
It's reduce and invest.
Yeah.
I think also going back maybe to the numbers from Allied Offsets, I think from what I've been seeing in the market right now, maybe as a start of 2025, both the primary and secondary market were active. There's a clear seasonal trend when corporate demand picks up towards the end of every year. And this is where, corporates are ready to buy, let's say in the first quarter of every year as well. I think this has definitely created this kind of liquidity and price movement in the market, and overall kind of stronger engagement across different types of buyers. I also think it's kind of important to track down the prices, and there's various, companies working on that. One of them, I also have to say, it's Climate Impact X. They have a huge trade database for different bids and offers and transacted kind of, projects and credits in this market. So I think, whenever any either corporate buyer, institution, bank, trader, anyone, any intermediary that wants to have access to kind of these numbers, it is very much available at the moment. So it's not a market that's passive. I think it's very active, and it's growing. And hopefully, in 2025, we get to see more numbers and more people participate.
Definitely.
Yeah, thank you for that. Yeah.
Price discovery is critical for market formation. So
Yeah, I think
everybody that's doing that, great. From price reporting agencies and exchanges and other providers that are building out this ecosystem, we need that. And I want to continue to see that innovation and keep doing what you're doing. Don't lose that passion.
It's a great reminder that while carbon markets can feel slow at times, there are key periods where this demand surges.
Mm-hmm.
Yeah, well said. Alan, you have any final thoughts?
Oh, sorry, Alan, you should go final thoughts, and then I want to say something personal at the end. That's okay.
Oh, yeah.
No.
I say I'm like cautiously optimistic heading into 2025, right?
Yeah, man.
I love Rene's energy. I love how optimistic he is like all the time, and that's why I love talking to him every time.
But dude, you guys see this personally, because when I do one-on-one, I do it, but when I'm on a stage, I don't. So people have this different view of who I am. So
yeah. So I would say like it's been a emotional roller coaster for me. How I feel about the carbon markets over the last 3 or 4 months, right? Like after COP, it was like, yes, we finally got it done. Article 6, everything's going to be terrific. Let's go, it's happening. And then after the election, I don't know. I don't, like, do we even care about the
words?
Do we care about climate change? Like, and I'm just confused, man. I'm just confused about what to believe, what to feel, what to think. So, but I think a lot of people are in this market, and I think what makes this market so attractive, so beautiful, so amazing is the amount of people that will just do the work without any certainty because they believe in the end vision, right? And that is
and they're not looking for accolades. They're doing it for a higher purpose.
Yeah. And that is why I'm attracted to this market. That is why I'm still here. And it's because of all the people that I meet on the daily basis. So what I believe is as long as we've got this core group of people, right, the doers that are going to get out of bed every single day and work their ass off in an uncertain market, I believe that's going to, at the end of the day, going to drive a massive, meaningful, positive outcome for everybody.
Yeah.
Yeah, very well said.
100%. Okay, just one last one. Sorry, I can't help it. You guys are really smart and you come up with really good points. I've been around for a long time and I've seen some amazing people throughout my career, and I've learned so many great things over the years, yourselves included. As a trader for a long part of my life, what I learned is just something that you just reflected on and kind of reminded me of, Alan, which is the best traders never get too high or too low. They're the folks that stay consistent, that make judicious and deliberate like investments and allocation of capital. They take risk, they take so knowingly, and they just stay the course. And what you just described is basically the hangover effect. People get too high at the party, drink a little bit too much, get tipsy, everything's great, and you're looking at it through those lenses. And then the next day, you basically feel not great. And then, reality sets in, and you guys probably have to look forward to this at some point. Your kid waking up going, Daddy, it's 6 a.m. on a Sunday. Wake up. What are you doing? And you're like, dude, go out. You're trying to sleep. So that was the reason why I stopped drinking. But, just stay the course. Like the reality is it's a long process. And like wealth creation, time is a key component of that equation. And same thing for here. Decarbonization is going to take some time. We're ultimately trying to wean the entire world economy of fossil fuels. And that is a transition that obviously has push and pull levers with it. It's very difficult. And what we're trying to do that is doing it through the same metrics that got it to that place, which is using economics. And politics play a key role in defining policy, and you just have to navigate these kind of ups and downs. So stay committed, stay conviction, stay doing the things and just be active. Like you don't get prizes for that. You just do.
Can't get too emotional.
Yeah. Can I bring the tone a little bit down? I know we're having so much fun, but kind of just want to just commemorate someone that had a tremendous impact on our industry who recently passed away. So this is kind of an in memoriam section. I want to make a reflection, then I want to hand it to Darina because you knew this person. I want to say how I feel about the person and their impact, and then kind of lighten it up by giving a funny anecdote. So if you guys will entertain me. And that person is Mikel Luson, who passed away just recently. And for those folks that don't know him, Mikel was a staunch advocate for nature-based solutions. He fought the good fight for a very long time. Most notably, he spent a long time as the Chief Sustainability Officer at DBS, where a lot of folks met him. He was influential in part of VCMI, just a number of different roles, but he's best known for being the founding CEO of Climate Impact Exchange, Climate Impact X. And, I'll let Darina sort of tell the story there. Just want to say, send our condolences to his family and all the people that loved him. He had an amazing impact, and I think it just deserves to be shouted out. I want to say, kind of again bring the term back up. I had so much respect for Mikel and hold him in high esteem. I was obviously at Expansive at the time that CIX was formed, and it was formed, with its key stakeholders, and they're well known, and then I'd heard about it, right? Because it's a small market. And so we're running CPL. It's going great. We're having record after record with regards to retirements and liquidity and just the infrastructure that we're building was finally being used. We're an overnight success, 10 years in the making. And I'd heard from a bunch of folks and I'd seen investor decks come around for CIX as it was being formed. And people were like, oh, are you scared about competition? I was like, no, like we welcome competition. And anyway, Mikel, to his credit, when he launched, he sent me a message, and I obviously replied and I said, hey man, let's jump on a call. And we actually had a recurring call in the calendar. Like we had it every month, but we didn't do it every month. Like just life gets in the way, but we did it pretty regularly. And we did it in terms of, okay. And I remember the first thing that I said to him, I'm like, hey, Mikel, welcome to the playground. It's been really lonely for a long while. I'm looking forward to the competition, but inside these white lines, I'm going to kick your ass, right? And he was like, bring it on, man. But after, like when you step away from the court, like you do in any competitive sport, right? You have to have respect for the people that you're competing against, and because they make you better. Right? Competition is one of the key ingredients in life that just moves things forward. Otherwise, people get apathy and just kind of complacent. And my fear was that, as a hungry startup that then gets a bunch of, capital, that you start to build bureaucracy and you atrophy as a company because you effectively have this monopolistic kind of view. And that happens in the private sector, right? Think of all the private sort of government-led businesses that then get privatized as this kind of whipsaw thing. Anyway, I really enjoyed those conversations with Mikel, and we looked at it also as key stakeholders and custodians of a market, not custodian in the financial term, but like literally we built infrastructure onto which the markets can scale. And we both shared this passion, and obviously, I just represent part of the expansive universe, but we shared a conviction and a passion for building it better and to innovate and to challenge one another. And that liquidity across all exchanges was beneficial to the market. We wanted to make sure that we weeded out bad actors and we could exert rules and that rules and would actually promote more participation, and then you have price discovery that's aided across different time zones, and that would aid participation, and that would beget more confidence, that would beget more and more liquidity, and it was a win-win as opposed to a zero-sum game. And so just want to say that and reflect positively on him and his legacy. And then I want to hand to Darina, because I know you knew him and worked pretty closely with him and his leadership team. Want to say any words on that?
I mean, Mikel was a visionary leader in sustainable finance and carbon markets. I think he was instrumental in promoting the transparency and integrity in the voluntary carbon market. We remember him as a great leader, but as a very humble person whose presence in the office was always very radiant. I think, he was looking at him, he was very deeply committed to the change, and he was really passionate about it, to the point where you start questioning your own passion towards this market. Like, am I passionate enough? So I think, we'll just remember him with the greatest kind of words and memories, and, we honor his legacy in CIX, and we extend our deepest condolences to his family and kids. And all we can say is rest in peace. Hopefully we can, live up to his expectations and his vision and his kind of thoughts and passion about the VCM space.
Well said. Alan and Eddie, I don't know if you guys knew him. If you have any words, feel free.
No, unfortunately, I did not get the chance to meet him, but I've heard all the great stories and all the people speaking very highly of him. So
yeah. I think one great story that everybody remembers is that early days in CIX, when he was interviewing people and giving them jobs, they were all very surprised to see that the CEO was having this interview barefoot. He would never have his shoes in the office. And that was like, the biggest kind of memory that everybody really remembers of Mikel.
Yeah.
Yeah, I don't know Mikel, but I see his stuff on LinkedIn quite a lot. And yeah, it was really shocking for me to
very sad news.
Hear about that. But on a related note, I have also recently embraced barefoot shoes. So I'll live up to Mikel's legacy by working around more in barefoot shoes.
That's great.
Yeah.
Connect to nature.
Yeah, definitely. They're very good for your feet. So Mikel was definitely
ahead of the curve. Good one. Eddie, sorry for that kind of detour. I know it wasn't in your agenda,
no worries.
It was worthwhile saying.
No. Yeah, and I think it's good. I think these leaves a good legacy, and also it serves as a motivation also to continue to push the market and to drive positive change and impact, for the people that have sacrificed so much of their lives to doing so, right? And yeah. So don't want to end on such a kind of sad note, but
sorry, heavy note.
To lift, yeah. But
we'll go around the room and say 3 things that we're excited about the carbon market in 2025.
Yeah, I love that. That's great. All right, how about you start, Alan?
You go, Alan. Yeah.
Oh, okay. All right, kind of put myself on a spot here.
Go for it, man. That's a leadership
Rene
right
can start.
No, Alan.
Yeah, no. Okay, so first thing is, like we're actually super excited about where we are at, and the journey of building Carbon HQ. We've been building this for about 3 years now. We've tested our software extensively with a bunch of project developers last year, and now we're actually at a place where are implementing this fully for fairly large project developers around the world and having them switch from existing systems like Salesforce. So super excited about that. Second one, really excited about all of the Article 6, all of the CORSIA stuff, and excited to see market activity picking up. And what is the third thing? Yeah, just more progress, excited to see more progress and hopefully yeah, more good news that's going to come out of like stuff like SBTI suddenly approving offset credit use out of the blue whatsoever.
We can
So
we can
that's me.
we can hope.
Rene.
Yeah.
Darina, do you want to have this, or I'll let you have the last word, Darina, if that's okay.
Yeah.
I'm excited about so many things, but it's kind of hard to bring it down to three, but I'll try. So number one, I'm excited and constantly rejuvenated. Like I feel to the verge of feeling guilty for kind of just tapping into this energy, but Darina, Eddie, and so many others have joined a little group chat that we've got that started out honestly as a small mentorship group. It was like 8. I say kids, but folks in the early 20s who Darina's one of the early members and who I enjoy having conversations with around life and growth and career transitions and opportunities and kind of positivity, etc. And it's blown out to like 25 people. It's just like, how do I not disappoint them? But that aside, and my kind of imposter syndrome aside, is the energy that they bring. So I'm excited for the energy that young people bring and they harness and they recharge not only my batteries, but certainly I had this conversation last night with a senior person in this industry who's like, man, I'm so excited these young folks are here because they believe in it and they're going to fight that good fight and they're going to fight it way beyond our time. When we hang up our gloves, when we exit, it's going to be in good hands. Like, how impressive was that guy, right? Like, we just had a call with a CEO of I won't say exactly the place because you guys will probably reverse engineer it, but of a critical infrastructure part of our industry, young CEO who's just dynamism and he just understands it. And that energy is so infectious. It's just like, yes, there's more coming behind. So that I'm excited about. I'm excited on that front, just for positivity. I'm excited. Then number 2 is the potential for these disruptive technologies like artificial intelligence, who's in its infancy, and how we don't even know what the impacts could be. And they'll be positive and negative, but I'm just seeing about, and I just, again, I'm super old in this case. I'm dating myself as a Gen X, but like sometimes I feel like a boomer. But like Eddie's like said to me the other day, dude, you got to use ChatGPT for this. And what normally would have taken me literally days to do, I was able to do on a Sunday with a kid crying outside and just jam away, right? And it literally took 1.5 hours. And the quality of the output of me guiding and leveraging the AI was so good just for document creation, right? And it was like, oh my God, where have you been all my life, right? And so now, yeah, like, and then now 3, I'm excited for, again, the young generation, but the young generation, Generation Alpha, effectively. My daughter is 4.5 going on to 40, and I have these incredible conversations with her, and she has amazing conversations with me. But the other day she was having a conversation with artificial intelligence, like she was like, ChatGPT, how do you do da da da? And she literally was chatting the voice. These kids, literal kids, children are growing up in an age of transformation. To them, artificial intelligence will be as ubiquitous as the internet was, as social media was, as mobile telephony, as all of these different transformational forces have been, cloud, et cetera, et cetera. And you can go back to the Industrial Revolution and other technological revolutions. This is a humongous wave. And the potential of what it can harness for that future, I'm incredibly optimistic about. So yeah, the downside is it's going to be voracious in terms of appetite for energy, and data centers represented, I don't know, a rounding error in the energy grid of the United States and the rest of the world. And now there are a significant quotient, like 10, 12, 30% last check that I read the IEA things. And so, okay, we've got to temper that and the corresponding emissions, but I'm super excited for those 3 things. So young people, AI, and really young people.
Yeah, I wonder where your stock portfolio is sitting, given
man,
your AI bullish
I am,
talk
yeah,
over here. Someone's long
I will
on
talk.
NVIDIA, I assume.
I am long on 2. I'm long on 3 sectors. If you want to talk portfolio, I'm an open book. And as an investor,
Dude,
no.
we don't want to
I
talk
got
stocks.
no. I've got private, public equity, and in terms of thematics, for me, it's 3 stories. It's It's transformative technologies. No, seriously, artificial intelligence. I get asked this all the time. I'll tell you guys. It's artificial intelligence is a wave you can't ignore, right? And all the requisite names in that, everyone can figure that out. That's just betting the market and getting. And I was lucky to kind of get in a little bit earlier. That's cool. And I'm super long carbon, right? Like I'm talking my own book here, but I'm super long carbon across a lot of different ventures, my own and others. And I've been, I don't know, I was reflecting. I was like, oh shit, did I become an angel investor? And yeah, I wrote a bunch of tickets and so did my partners over the last few years. And it was kind of like, I had someone tell me like, dude, chill out. You don't have that much money. And then the third one is biotechnology. So kind of going back to my roots. My wife's in pharmaceuticals and I still keep a close eye on biotech because again, it's transformative impacts that it can have on human health. So for me, those are my three areas and buckets of investment, man.
Well, thank you for sharing. Yeah. Shall we, move on? Darina, do you want to give your top three?
Last words.
In very short, I think what am I excited about in 2025 is definitely, stronger corporate climate commitments, driving market activity. 2 would be hopefully seeing more liquidity and growth in secondary market play. And maybe something that I'm closely working on and following is the acceleration of Corsia and compliance market expansion. So hopefully, we get to see more of these 3 things in 2025.
I love it. Young people optimism.
Well said.
Eddie, what about you?
Yeah. So very well said. I would say I'm number one, very excited to see rising corporate demand and corporate climate commitments. I think that's on the top of everyone's kind of list. But number 2, I would say, is the convergence of compliance and voluntary markets. I think in 2024, there's about 75 compliance schemes in place, like 36 ETSs and around 34 carbon tax systems, right? So I'm excited to see those markets converge with carbon crediting mechanisms in 2025. And then number 3, I would say, is just personal growth at Valterra, building out the company and building out our other ventures that we have in the pipeline, kind of coming out of stealth mode on a lot of projects that we've been working on. So invested in. So yeah, definitely excited for those 3. But yeah, I think that's a good place to wrap it up. Obviously conscious of everyone's time. Oh, Alan, did you want to add something?
We missed one, like this podcast, right? Yeah. Like
we're
super excited about, this week in
Yeah.
episode 1. How exciting is that?
Episode 1.
Thank you so much for having us.
Hey guys, thanks for joining, especially last minute. We've been playing this for a while, and again, like I'm juggling way too many things.
So good.
But Eddie's taking it on. I had so much fun. I think this is a cool platform, and it's an open invite to everybody in the network. You guys are welcome anytime back, and I'd love the conversation. So thanks, it was fun.
Thank you so much.
Yeah, and feel free.
It's a pleasure.
Yeah, and thank you guys so much for your time and for joining. And feel free to follow us on LinkedIn and subscribe on
like, share, subscribe.
like, share, comment, subscribe, all of the above. All right, I think that's a wrap. Thank you guys, and goodbye.
All right, thanks everybody. Bye-bye.